Hey traders, Raghee here, and I was thinking about what I wanted to talk about here Monday, and the one that keeps popping out to me is just this concept of how I play the close. And we had a good closing session in the chat room today, and we've been doing a lot more longer term charts. We'll talk about some of the longer term charts that we have setups in a number of stocks and futures contracts. Had a great day in bonds today on our longer term setup, but we're always looking for opportunities. It doesn't matter the time frame, it doesn't matter the market, as long as there's liquidity. And I even like there to be a certain connective thread, and it's that connective thread that I want to talk about here today. And I won't say it's a mistake, but to do something other than that. But I want to kind of put this out there to think about, and that's this. Before you take a trade in the S&P, and I know this is by far the most popular index futures chart, but before you do that, you got to look at what the Dow is saying and the NASDAQ. And the reason for that is, let me show you. The S&P has really become like this second-rate NASDAQ. So much of its weighting is in tech. It kind of behaves like the NAS. And then it sort of behaves like the Dow. And then it sort of behaves with healthcare, and we have the weighting of JP Morgan, and we have the weighting of Berkshire Hathaway and banks, and a lot of XLF components in here. So it really is this strange mix of the Dow and the NASDAQ. I kind of say that the S&P, its big brother is the Dow, and its crazy cousin is the NASDAQ. Most traders will look for opportunities in the S&P first. I think that's wrong. And then think about this for a moment. If you've been struggling with S&P trades the last 3 to 6 months, try this one switch. Before you take an S&P trade, make sure there's a trade in either the NASDAQ or the Dow, and then take a trade in the S&P. So you can either go 1-2 or you can go 1-2. Right? But that's really what you want to do. Make the S&P second, not first. I know a strange thing to say for a market that a lot of people feel is the best barometer for the markets in general, but try that and see if making the S&P number 2 doesn't help you out. Now the reason for that is, again, the way the S&P moves. It's not going to go anywhere that the NASDAQ or the Dow don't let it. So case in point, trading the close here today, and we don't do this often because the levels aren't reached, but the market started to really sell off into the close. You could see that pretty clearly in the last hour of the day. So that's great, no problem. We project our lows using our price movement, and we had a second and a third level that plotted in all three. Now, the first is the one that's the most aggressive. It's the most amount of risk. There's nothing wrong with it. But, and I'll go with the first a lot in the morning. Like if you look at the projected levels and the alerts that I send out, I'll do that a lot in the morning, no problem. But in the close, I really like to focus on the second or third level. So a deeper move to the downside. So what happened is we hit the second level on the S&P, the NASDAQ, and the Dow. But I recommended to the traders, hey, hold off on the S&P until you take that trade in the NAS or you take that trade in the Dow. Once you've decided you're going to do it and you place that order, then you can head on over to the S&P, because when this thing starts to get out of the S&P's way, when this thing starts to rally, you'll get a really nice follow through. And that's exactly what we had today. So try that little trick, see how it works for you. Take a look at the weighting, take a look at the sectors. You'll see why it makes sense, and I'll see you in the next update.